All right, welcome to another episode of the Lunch Hour Power Hour. We have sushi for today, Publix sushi, which is supermarket sushi for today. Today we're talking about taxes. A lot of people don't understand taxes. Look, if you're going to invest your money, or if you're looking to invest in general, you got to understand taxes. The number one biggest expense that everybody has in this world is taxes. Don't believe anything else. Your number one biggest expense is taxes. Just look at your paycheck and see how much you're taking out in taxes, and you will understand that. And then compound that over the course of how much you work, and you'll be amazed that, man, they're taking a lot of money in taxes. So you gotta understand the tax game. My best advice to you is get some books on taxes, especially with investing in taxes and how that plays a part. I chose to invest into real estate because I understand it. I understand the game. I understand what it's like to buy a piece of property, how much it costs to rehab, what my cash flow is, what I can rent, what's the market, and if I need to sell, how much can I sell it for, so I can make money on the exit as well as while I'm holding it. So with that said, you have to understand taxes, because taxes is very important when you're dealing with investing in general. Let's just say you're not into real estate, right? And you just invest into your 401k or whatever, your Roth IRA. You are still paying fees. Just try to access that money. You're going to have to pay a penalty fee for taking it out before you retire. 10%. So let's just say you have $100,000. You got to pay 10% of a penalty fee of taking out $100,000 out of your 401k, which is $10,000. Okay. With real estate, there's a lot of tax incentives that the government gives you, like depreciation, for number one. If you don't know what depreciation is, it's a paper loss. So real estate gives you paper losses called depreciation, component depreciation, that you get to write off on your taxes against your income. So, for example, let's just say, for example, you earn $100,000 in income, rental income for the year, right? After your expenses, let's just say you have $50,000 in expenses, then you get to take, let's just say, depreciation on your real estate, which is your building, and maybe the components or the things inside of the property that you can depreciate, which is, your appliances, your floors, anything that you've added or rehabbed. Oh my God, that guy's gonna hit that guy. Woo, that was close, bro. Watch out, man. You better watch out with your big ass truck. Sheesh, people can't drive, man. They got these big trucks and they can't drive them. All right, so like I was saying, you write off your $40,000, $50,000 in expenses, and you have another $20-something thousand in depreciation costs. So now all of a sudden, you have your allowable income, which is 50 minus, let's just say, 30 in depreciation, 60, 70, 80. So now you have $20,000 of actual income that you're going to pay taxes on. $20,000 of income is your lowest tax bracket, okay? Compared to if you were a W-2 employee, guess how much you'll be paying at $100,000 in income as a W-2 employee? A lot of money. 30%. God forbid you get a pay raise or a bump. You're paying more, okay? Let's just say you invest into stocks, short-term stuff. You're going to be paying the highest rate in taxes in short-term investments, in stocks especially. They're going to 1099 you. That means that income's going into your personal tax returns. So your income level's going up. You're going to get taxed more. So you got to invest with the tax game in mind. I invest into real estate because literally I write off everything in taxes. My property earns positive cash flow, but yeah, I take all these paper losses. So I don't really have to pay anything in taxes. I don't cut myself W-2 employee checks. I don't cut myself checks. I haven't cut myself a check since 2015. Now I know you're just saying, how do you get paid, bro? My real estate pays me. It pays me. It goes into the business. It pays me. it does the work for me, okay? And then I get to take out that money as a salary or as a 1099 employee. And so I never paid W-2 taxes, all right? I'm not a W-2 employee. My business files taxes. I file a personal tax return, yes. But W-2 employees, the taxes come out before you even get your paycheck. So I take the money out through the corporation, which gives you more taxable shielding benefits. As a corporation, there's a lot to go into. I'm not a tax attorney, a tax advisor. All I know is my tax accountant has set this up for me. But you got to understand the structure, or you got to at least understand the concepts so that you can ask intelligent questions. Okay, you need to understand this. And then when you understand those concepts, you can start running your life like a business, basically. Your household like a business. Your car as a business. Your mortgages as a business. Your business as a business. You start using tools, incorporating them, because you have this business mindset, so you can use all these tools that they never teach you in school, which is the mileage tracker, QuickBooks, investing with the tax strategies in mind, okay? And these tools help you keep track of all of your expenses, and then also help you be able to use them as deductions or write-offs at the end of the year. So you're not just trying to find things, and you're like, oh my God, I have all this taxes to pay. You need to have these tools in place so that you can have more write-offs. The more write-offs you have, or the more things you know how to write off before tax time comes, is the more you can strategize throughout the entire year, so that when the year end comes, you already have all this stuff already strategized, and you have all these tax write-offs already there. Make sense? You got other things called 1031 exchanges, where you can sell property and not experience a taxable gain. Therefore, you basically are just deferring the gains. So you roll the property, the gains, into another property, and you never have to pay taxes on the gains. Super wealthy do this. I've done it. I did 3 1031 exchanges last year. I had out of all the profits of those sales, I would have been taxed on $500,000+. But because I did exchanges, 1031 exchanges, I paid 0 in taxes. 0. Paid 0. That's because of reading books. That's because of taxes, understanding the tax game. Now, when you understand taxes as well, you can see opportunities in investments that other people can't see. A lot of people want to do fix and flips, but fix and flips are short-term money. You're still going to have to pay taxes at the highest bracket because it's short-term flips. Okay, so your income is going to be, you're going to have hits. Now, your businesses are probably going to be doing the fix and flips, so you're doing them through your business. So you're going to be able to write off a lot of that, but you're still going to have a lot of up and down flips and up and down money coming in and out with your flips. Now, with that said, your taxes and how you pay yourself is a whole nother story. So if you're going to pay yourself through your business, then you can shield all your income, obviously, because you understand that. But when you hold property for the long term, you have so much more benefits, like depreciation. When you fix and flip, you don't have the depreciation write-offs. Okay, so you have less write-offs. Now, don't take my word for it, because I don't do a lot of flips. I've done it in the past, but right now I do a lot more buy and hold, and then for the long term, appreciation for the long term. Anyway, that's it. I'm done with my roll. I have another roll. I'm gonna eat it, and this is it for the lunch hour power. I hope this helps somebody. Study taxes. It's really important. If you're gonna invest, whether it's real estate, stocks, businesses, whatever you're investing in, understand the tax game, because that's your number one biggest expense. And you should understand it, and you should know enough about it so you can speak intelligently on it. And when the accountants or the attorneys are BSing you. You want to know more than they know. Okay? Because you are your best asset, and only you is going to watch out for your business the best way that it can. All right? Love you guys. Have a great day. Bye.